For over half a century, humans have endeavored to make business a force for good. But is the movement working? Or is it time to explore a new path forward? Welcome to Less Talk, More Action. We are your hosts, Joel Caesar and Owen Barrett, experts in clean energy, net zero real estate, decarbonization, and entrepreneurship. In each episode, we ask provocative questions and share stories from the front lines of sustainability with leaders in science, tech, and business, taking real action to design a cleaner, better future. Thanks for joining the conversation. Now, let's get to work. Welcome to Let's Talk More Action podcast. My name is Joel Caesar, the world's undisputed voice of building decarbonization. Joining me as always is Owen Barrett, the founder and CEO of America's fastest growing solar company. Today's guest, August Biniaz. He is the Chief Investment Officer of CPI Capital, a real estate private equity firm focused on multifamily and build-to-rent investments across the U.S. So we're going to just jump right into the bit with this piece of the pod because the bit is related to a reaction to talking to this gentleman. So as hopefully our audience will listen, continue from this point to the show, Owen and I, if you didn't know that, have been in this world in the past where we've been multifamily private equity investment managers, syndicators, there's different terminologies for it, but folks who try to raise money from either accredited or maybe sometimes non-accredited investors so that we can put equity into purchasing buildings. We've focused on multifamily in the past. That's a big part of where your company focuses on where you do, Owen, because you have a unique perspective of being in the seat of someone who's owned and operated and still does those buildings and the challenges of multifamily. Look, I thought he was an interesting guy, and I haven't talked to many GPs like him who are raising money. You know, we were doing that, I always find it fascinating. Like, I didn't really ping him on this, but like, why you guys? Like, out of all these syndicators that are like running the same playbook in a different way, why him? We didn't ask him that question, but I'm sure he would have had a good canned answer because he's the Chief Investment Officer. But yeah, I think we're gonna dive into this like a reaction to his conversation, but also the bit being like, hey, this guy was different than the people we usually talk to. He's like basically anti-sustainability, he said in the show, and there's reasons for that. I think were reasonable for him to his perspective. But yeah, I think it's like you and I both agree. We all need to be better at speaking to people who maybe don't have the exact views as us, and there's still ways we can do business and be friends and be good neighbors.
Yeah, good neighbors. That's a good way to put it. I feel like you can sell sustainability a lot of different ways, and people don't necessarily have to agree with everything that you do in order to agree that a project's a good idea. Like, we often sell solar projects to climate deniers, and that's okay with me. We're still getting the project done because we can translate the value of money. They can tell me about how they don't believe in climate change. I'm okay with that. We don't all have to believe the same things. But I do think our sustainability corner could probably do a better job having conversations with people with different opinions and perspectives. I think we're maybe a little bit, what's the word? Self-righteous.
Self-righteous. Yeah, there's other words I was thinking of, so we'll stick with that one. One of our friends, someone who's been on the show multiple times, I'm a big fan of hers, but she had a post recently on LinkedIn where I don't want to like throw her under the bus, so I'm not going to describe too much. People will connect the dots if I describe the actual like nuance around the situation. But it's basically like she posted how she thought she was going to some room where she was going to be speaking to a bunch of executives who had her same vision, and it turns out there was a lot of fossil fuel related people there that like still wanted to work with her and like talk to her and like collaborate, but who knows how she actually handled the situation, but she posted on LinkedIn, like, what should I have done? What would you have done? It was like a provocative post to get people to engage. Yeah. And this is the same way her and I met when I was like trolling her at some point. I was like, you talk to the person because you're in the room and it sounds like a pretty impressive room to be in. And just because they're an executive at a fossil fuel company, they're not evil. They have families. They're probably Americans. And there's probably lots you guys would have alignment on. So yeah. Talk to him.
I feel like we forget that like jobs can just be jobs. You don't need to like be passionate about what you do. You can just work for money. Like, that's okay. That's how it used to be. And so, yeah, I really get turned off when people like say that they hate someone or they can't talk to someone because they're on the other side of the aisle. Just like, or not even on the other side of the aisle. They just work for someone on the other side of the aisle. Like, it doesn't, I don't think that's a good way to approach life. I saw that lady's post, and I thought she was insinuating that she like didn't work with anyone, or to me, it was like it was the wrong read of the room for her. Like,
yeah,
you got to be able to work with everyone.
Yeah, for so many reasons. Maybe you and that person could find opportunities to improve the environment through their work that they would be totally open to. Like,
maybe they'll give you a bunch of money to do something.
A lot of people that work in oil and gas are probably call themselves environmentalists, and that's and some of the people that we know would be like, that can't exist. You can't work in oil and gas, call yourself an environmentalist. But I'm saying there was another guy, previous guest on the show. Very progressive, a great guy, doing cool stuff, entrepreneur. I love this guy. But there was an exchange I had with him. I think it was like we were commenting under someone else's post, and he said, "F oil." Like, I'm not saying the F word, and I was just like, that's just a little harsh, Like, think about what oil's done for the world over the past 300 years. Like, you can't just be like F oil when you're using it and you have used it, and like there's lots of good people working in it. Like, it's just too harsh,
Well, it's too harsh, and it's like such a hypocritical stance to take. You can only say fuck oil if you don't use it. And there's no way that this guy doesn't use it. He probably uses it just as much as the average American. Maybe he drives an EV. I bet his EV is charging off a dirty grid. Like, I think we got to just get real, get the hypocrisy like out. It's just, I hate that more than anything. I hate it because it's easy to say, but it's a lot harder to do.
Yeah, and it just mean-spirited into an entire walk of people and regions of the world where this is making people's lives better. So it's like, we can't just have that perspective.
Yeah.
It actually reminds me, I was thinking, we were trying to come up with a bid idea. There's been a post that's gotten, I think an article someone wrote about how it shouldn't be called the energy transition. It's just energy addition. Have you seen this going around anywhere?
No, but I feel like I said something like that. It shouldn't be renewable energy. We should just be energy.
Yeah. Like the energy transition. This guy's post was, I think, and I didn't read the article like a lot of people. I saw the headline. There was a link to it. I didn't actually read it, and then there was a whole discourse on LinkedIn about it. I plan on reading it. I have it earmarked, but I think what they're trying to say, the guy's point is like, look, everything is growing in energy, and we can all acknowledge that. And all the doomsday climate people will be like, well, that means the end of the world's coming because of all this nat gas and more coal and oil that's happening. And the clean energy has to be replacing it for this to work and be the transition. And it's like, that's not the reality. There is great things happening for clean energy around the world, from China to America and everywhere in between. But it is additional to other areas of generating energy also growing. And that's just the fact.
Yeah.
Well, anything else to react to? I didn't let you actually react to August besides the more high level conversation. What do you think of the show?
No, I liked August. I think, I've been on his podcast. I like him and his co-host. I think it's really important, whether it's in your professional life or your personal life, to be able to have conversations with people that disagree with you. It seems like it's a funny thing to have to point out, but I do feel like we're moving in this direction where it's getting harder and harder for people to do. I know for younger, like I have some exposure to like college kids through my stepson, and like, it's pretty challenging to have conflicting conversation. Yeah. Like they just tune you out.
Yep.
Yeah. Yep. I'm like, that's not.
They've labeled you something by some opinion.
Yeah.
And there's no discourse anymore. Yeah.
It's just gone.
I have some people in my life that are that way too.
They're like, that's not a good way to do anything.
And then just the last point on that, actually, it's really interesting to think about August, because like he associates sustainability, environmental movement with government bureaucracy and optics, and what you might call what's the word we always like to throw around, what that JCal uses, where we're making fun of, like the moral, what's the word that they always use, making fun of people, virtue signaling.
Yeah.
August was basically saying like all this environmental sustainability stuff, especially when it comes from the government, is virtue signaling, and he's got his antennas up, he's skeptical. But where does that come from? It doesn't come because August didn't say I hate the environment. Like I want. It
comes from us.
No, it comes from his upbringing in Iran, where he was in an authoritarian government, and he's like, anytime the government's telling me to do something I don't think we should be doing or getting in the way of me running a business, this guy's like, I'm skeptical. So it's like, again, that's where to have to see people on the other side and know where they come from. Like this guy, that's real. His perspective, like.
You know what he said too, though, that I thought was interesting, and maybe we can get someone on the show that runs these kind of programs. I thought it was fascinating that he said, in place, and this is probably true in the U.S. too, but you can increase your density if you build things like to a certain standard. Like, why not take the carrot approach? Like, there's with the whole movement of BPS and just like penalizing people, and why not take the alternative view of saying we're going to abate your property taxes, or we're going to let you do higher density, or like incentivize people to do it. I feel like that's
they
problem
do it. I've seen it with LEED certification. Like, and
why not do it with something that actually makes a difference?
I knew that's what you were going to say. Yeah, it's like good idea. And clearly, guys like him, people that think the right way about owning assets and investing people's capital, they'll see that and it's like, okay, does that work? Let's get that advantage.
Yeah.
But yeah, let's make the incentive something that's tangible to the environment instead of not talking LEED certification at large. But yeah, I think there's other ways that carrot can be incentivized.
Yeah.
Well, cool show. Now let's jump into our conversation with August Biniaz. Joining us today is August Biniaz, Chief Investment Officer of CPI Capital, a real estate private equity firm focused on multifamily and build-to-rent investments across the U.S. August leads investment strategy, acquisitions, and asset management at CPI, while also educating investors through his podcast, Real Estate Investing Demystified. So, August, welcome to Let's Talk More Action.
Yeah, excited. Thanks for having me, guys. Looking forward to our conversation.
Well, we're happy to have you, and as you may know, August, I'm sure you're a fan of the show. We start all our guests off with the same first question: how are you taking action to make the world a better place?
Taking action to make the world a better place. I guess number one is kind of from that core family element of it is being a father, being a good father. Raising great sons. I think that's a big responsibility because there's a nurture and nature component. Nature we can't really modify, but nurture we definitely can. So I think that's a big responsibility as a father. And then next is our business, CPI Capital. As you mentioned, I'm the Chief Investment Officer, so I play a pivotal role there when it comes to employees, service providers, and the jobs that the company creates, but also the housing that it provides to a big portion of the American population. So I think those two on a high level quickly.
Oh, and you guys know each other. You've been on his podcast. Is that how this got here?
I think this would be a little bit of a different podcast than what we're used to. I was on August's podcast. I'd like to do a podcast tour and get the multifamily owners and operators kind of familiar with solar and how they can increase NOI. I don't know what direction to take this podcast, but August is not in the sustainability sphere. So I think we can have like a real conversation. Maybe this is just one idea, but like, what do normal people think about sustainability? August, just so you know, Joel and I have been in this like sustainability ecosystem, this echo chamber for 10 years, kind of like real estate syndicator. Like you're in that echo chamber. It's probably who you network with a lot. You guys kind of all hear the same stuff. We all hear the same stuff. So it's interesting once in a while to like
have your own
get out of your
jargon.
own world and just have like a real conversation about, how does the multifamily syndication world see sustainability or solar? Does it matter? Does anybody care? Does it just come down to the numbers? Like maybe we take a different spin on this podcast just because of the opportunity here, Joel.
Well, we can do that. Let's do that. And I was going to say, do you even know what sustainability means? Like, does that word mean anything to you? Maybe not. And also, I think a good opportunity for our audience who are out there, a lot of them selling to or wanting to sell to or wanting to work with people like August who own buildings, operate buildings, know the challenges that he faces, what's important to him. So there's a lot of that we can dive into as well. So why don't we start on your angle, Owen? Do you have a specific question, or August, do you want to react to this?
I think that was it. That really was a question in itself. So, and you guys have to forgive me for going so deep into this and into this topic, but I am somewhat of a pessimist myself personally. It's just because of my background. I grew up in Iran, is a country where it's ruled by basically clergy, and it's a theocracy. So everything is being shoved down your throat, including religion and many other things. And many of simple freedoms that exist in the West doesn't exist in Iran, and it's one of the worst places basically to have civil liberties. So that pessimism comes from that system where you're being told to do many different things that in the religious front, on basic civil rights and liberties that you have. So I come into the business world in the West with that mindset of questioning everything. If it's certain mandates or certain initiatives that especially government puts into place. I was a home builder in Vancouver for close to a decade. So whenever I heard about sustainability, whenever I heard about also a lot of initiatives about First Nations that take place, most of it seems totally optics and borderline scammy. So I have a very critical viewpoint about it. And we had that detailed conversation with Owen on the podcast as well. And so it's not only as a multifamily owner operator, it's also as a business person who sees it as does it make a financial sense, or is it just for optics? The other part is what I notice is as well, like Canada is a very liberal country, and sometimes those liberties get pushed on way too far to the other side of the spectrum. So there are rules and regulations that are being forced on home builders. Before getting into that, Vancouver is facing a huge challenge when it comes to housing. There's not enough housing. Rents are very high. Property values are very high. In the city of Vancouver itself, median home price is $1.7 million and median income is $90,000. So
is that where you are now? You're in Vancouver now?
Yeah, I'm currently in Vancouver, yeah, but I go back and forth between Florida and Vancouver. So when you have government stepping in and making it more difficult for density, for development, and even for the process of construction, where they're forcing for different steps to be taken in for environmental reasons, I am such a critic of that. So yeah, it would be a great conversation when it comes to that. So yeah, off the surface, as soon as I hear sustainability, I think about it's something that's being forced upon. It's optics, too much government. It's a bureaucracy. Is making the process of bureaucracy even more intrusive. That's kind of the viewpoint I have out of it right off the bat.
That's actually fascinating in itself, right, Owen? Like the association of the word and what we try to do with our lives with bureaucracy and government. I know, August, I'm not disagreeing. I just like Owen said, this will be an interesting one for me as well. Owen, before you dive into where you were going with this, August, we like to, on the show, depending on who we're talking to, we talk to a lot of founders of companies. Usually that's in the clean energy, sustainability space, but still people I'm sure you would respect because they're entrepreneurs and they're not asking for government handouts. They're trying to add value to whatever part of the real estate industry they're serving. But when we do that, we like to ask about their journey. How did you become an entrepreneur? Like, where did you get here? So maybe we can, like, we usually do that towards the end of the conversation. I'd like to ask that now with, how'd you go from, you said you grew up in Iran? So
I did, yeah.
This is a fascinating story in itself. Like growing up in Iran, everything you described, the negative challenges, to entrepreneur, business owner, real estate owner, manager of capital here in North America. How did it all go down, if you don't mind me asking?
Yeah. Putting aside my background and my journey of moving to Canada with my parents when I was 14 and kind of going on that entrepreneurial journey, I would distinguish between two types of entrepreneurs. One, a group that really finds the world of being entrepreneur sexy and stumbles onto it or has to read a book or get into it and to kind of get the juices flowing to become an entrepreneur. And there's another set of entrepreneurs who are entrepreneurs at heart. They're from an early age, they all see themselves of being people in business and trying to come up with ideas, very creative mind, a kind of borderline ADD type of individuals. And I really had that. I always knew that I didn't see myself excelling in academia, but I did see myself excelling in business, having a creative mind, being able to connect myself and surround myself by talented individuals to allow my creative ideas to come out. So yeah, that was a journey I was on. So I always felt, now why real estate and how I got into real estate, I come from, I call it somewhat of a real estate family. My maternal grandfather was a real estate broker. My mom was a real estate investor of our family. She's the one that always invested in real estate and what have you. So if real estate was a language, I understood it from an early age. So this entrepreneurial spirit that was in my blood, and then the real estate fact that it was part of my family kind of allowed the two to come together and for me to excel and have success in this space.
August, I'm curious, with that sort of division of entrepreneurs, you think one excels more than the other? You think like the natural entrepreneur is generally more successful than the learned entrepreneur?
Yeah, great question. I would say a natural entrepreneur is more rugged. I think a natural entrepreneur has no other choice but be an entrepreneur. So it has some advantages there. But I would say also somebody who stumbles onto wanting to be an entrepreneur and goes the academic route also has a lot of success there, because they do have that risk-taking profile in their in their character, but now they have the academic background to excel and be surrounded by those Ivy League types in their sphere to do well. Whereas an entrepreneur is doing it from a young age and it does well. I mean, a common question, this was one of the questions we asked you on our podcast was, is it street smarts or book smarts? So I think if you have the entrepreneurial spirit, but you go the academic route, you will have a much bigger success than just having the spirit by itself.
Joel, what do you think I said to that question?
Which one? Academic or
Street
street
smarts or book smarts?
I'd say, like, they asked you, like, which one you have more of? That was the question?
Well, which one's more important?
No. Which one will have more success? Yeah, like if you had to choose one, which one would you choose?
I'm sure you said street smarts, Owen.
100%. Yeah. I put like zero value in book smarts.
Well,
I think it's a 99% from the 400 guests we've had on our podcast. It's been 99% who've said street smarts. And a lot of these people are academics who've done really well.
That's what I was going to say. It'd be interesting. Like sometimes I feel, I don't know what the right word is. It's not hypocritical. I feel like disingenuous knocking higher education because I have a master's degree. Like I went through the thing. I did it. And so
an impressive one, if I may add.
Best whatever environmental science program in the country,
in the world,
in the world. But then I talk shit about college and higher education and master's degrees because I'm like torn personally. I don't know that it's needed anymore. I don't know that the value is worth what you pay and the debt that you get into. But I've also like gone down that journey and done it myself. So I think it's an interesting dilemma that like the youth are going to face for sort of the foreseeable future, because as we make this transition from maybe it being less important as you get jobs, like it's not a clear decision to be made yet.
Which, Owen, when he says his bifurcation of learned or natural, I guess is the distinction, what bucket would you put you in there yourself?
So I would put myself in natural, but I never thought of myself as an entrepreneur. I thought of myself as someone that liked money and just had to figure out how to make it. So it was like, I guess I didn't really come familiar with the term entrepreneur like until college or grad school even, of like what is actually a person that tries to start a business. For me, it was just like, I didn't like the feeling of being broke or like constantly needing to ask my parents for money to do anything. I was like, I got to go figure out how to do this myself.
How about you, August? Do you like money?
Yeah, I mean, money gives you a lot of options, right? It's all about options. I mean, in life, the more money you have, the more options you have. I mean, that's the differentiating factor. You just get less options. Imagine planning a vacation. With money, you just get a lot of options, and without money, not many.
Less options.
So let's learn about CPI Capital then. I'm sure Owen told you on your show, he's been a syndicator. I've been a GP with him and an LP, so I know a little bit about the syndicating world. Both Owen and I sell to owners of real estate. The company I'm currently at is kind of bigger scale, usually like larger investment firms, but I shouldn't say bigger scale because I know syndicators can be really big and own a lot of properties. All that to be said. Tell us about CPI Capital. What makes you guys unique? Maybe we got some listeners out there that have money. Maybe they can invest. Tell us if they can. If you're looking for investors, give us the story here.
Yeah, no, absolutely. The real investors are the backbone of our company, and our deals are syndicated, which allows everyday retail investors to participate and get exposure to institutional deals that historically have been only available to Wall Street or through some sort of other financial vehicle like a public REIT. This is a way to invest in a large institutional asset and be on a one-on-one kind of basis with the founders of the company. It kind of gives you that really intimate feel of investing and the progress of the deal. We do both multifamily value add, where we buy existing properties and do certain upgrades, renovations, bettering the tenant profile, making the property run and be managed more efficiently, increasing the net operating income, increasing in turn the property value. Usually hold the properties around 5 years, depending on the loan terms and our exit strategy and so on. And then our target markets are Texas and Florida. In Florida, we're hyper-focused on Tampa. In Texas, we're focused on San Antonio and DFW. That's on the multifamily acquisition front. On the BTR front, which is build to rent, where we go in and buy a piece of land and build a community of rental units. In our cases, duplexes, but build to rent historically has been a community of single family homes. We do duplexes because they create more of a cash flow, kind of more yield, because you're getting more density in one location. We are currently having 2 projects in San Antonio that are in different phases of being constructed. We're looking to expand our footprint in the Texas market into San Antonio, into DFW as well. But yeah, that's high level on CPI. Another thing is that the firm was founded in Canada with a mandate of only investing in the U.S. Today, 70% of our investors are Canadian LPs, 30% U.S. We feel long term that number is going to, the U.S. number of LPs is going to surpass Canada, because it's just a larger economy, larger number of people that exist and so on. So yeah, that's high level about CPI.
So August, why are Canadian folks interested in investing in the U.S.? Are there not Canadian syndicators that are like buying and rehabbing Canadian multifamily? Is there something different about the market that prevents people from doing this in Canada?
Wait, let me guess. Can I guess first? Let's have some fun.
Sure.
I bet it's because the Liberal government is in the way and makes it impossible to do business. Is that part of it?
That's part of it. But keep in mind, Canada's got really 3 forms of political governments that exist, and all 3 of them are still to the left of U.S. Democratic Party. So that just tells you, if it's New Democratic Party, NDP, if it's Liberals, or if it's Conservative, they're all to the left of Liberals. So we're way on the left on this side. But aside from government intervention, I'll go into that. The number one reason is yield. On an apples-to-apples basis, I do a comparison between 2 cities that are somewhat comparable: Calgary, Alberta, and Houston, Texas. They're both somewhat oil towns. Now, obviously, Houston is much larger. But if you look at multifamily, and I make an analogy between multifamily and commodities. Okay, commodities, there's not really an arbitrage. You can't buy gold in one place in the world and sell it in another for some type of a profit or different price. It could be in the dollars or pennies, but there's not a real margin there for profit. Commodities are there's an index for it. There's a price for it that exists worldwide. Multifamily is somewhat similar as well, especially when you talk about Canada and the U.S., where it is somewhat safe. There is rule of law and so on. So and the way that multifamily that you can see what type of yield it produces is the cap rate. So if you go back to the comparison between those cities that I was making, the cap rate that you get, and cap rate is basically the yield you get on a property if you would buy it cash, the net cash on cash annual yield you get it, not including the debt. The debt is because everybody gets different type of debt. So on a Calgary property, and these properties are, let's say between Calgary and Houston that we're making this example, they're the same exact vintage. They're the same risk profile. They're the same unit count. They're the exact same property on both cities. The one in Calgary today is giving you a 4.5 cap. So it's giving you 4.5% on the cash that you've invested. And the property in Houston is giving you high 6s, so 6.8, 6.9%. So you're getting more yield on your money in the same product that you're investing in. So that's at the basis of why the capital is flowing from Canada to the U.S. and why even bother go through the other difficulties that exist. So that's number one, because higher yields. Number two is because of the availability of the type of debts that exist in the U.S., Canada. You don't have as many as many types of debt available as liquid as type of debts available in the U.S. You have agency lenders, Fannie Mae, Freddie Mac, that actually lend you funds. In Canada, we do have agency lender, but our agency lender, CMHC, just insures other banks and institutions to lend to you. So they don't actually lend you anything. They just insure the loan. You have insurance company in the U.S. You have funds that lend to commercial real estate groups. You have a more vibrant market when it comes to deal flow. There's more deal flows taken, even if you take out the relative, the relative increase in number and population in the U.S. compared to Canada. You still have more deals transacting. The deal volume is higher than it is in Canada. You don't have as many deals trading. So when you just put those three simple things. Now, the government intervention is another thing. In Canada, you have strict rent control laws in all provinces except Alberta. Ontario has a carve-out when it comes to when the property was built, and newer properties don't have really rent control on them, the ones that have been built. So the value-add business model, where you buy an older apartment community, you fix it up, you bring rents to market, you mark to market, doesn't exist in Canada because of all of those reasons that I just mentioned.
Which country has a worse affordability problem?
So, yeah, I can do an example for you again. So when you look at how the tenants are rent burdened, rents relative to property values in Canada are very low. But because of property value is so high, the rents are still high. So yeah, the tenant is really rent burdened. If you look at places, more urban areas like Vancouver and Toronto, the tenant is spending close to 50% of their income on rent. When you do this same calculation in a place like San Antonio, the tenant is sitting at something around quarter of their income, 25% of their income on shelter. So the tenant is much more rent burdened in Canada than it is in the U.S., especially when you look at Sunbelt or less urban areas like the Northeast or California in the U.S.
Well, that's interesting. I've always had this, Joel and I were syndicators for a while. So I feel like I'm allowed to say this because I was a part of the club to a degree. I've always had this underlying feeling that syndicators are a big part of the reason of the affordability crisis because of the value-added playbook. But if the value-added playbook doesn't exist in Canada, the affordability problem is actually worse. I might be wrong. I don't. So let me take it a step further.
Yeah, let me take it a step further. So today we're in a distress phase of the cycle. If the market cycle was a clock, 12 o'clock is top of the market. It was absolute mania. 6 o'clock is the bottom of the market. There's a lot of distress. There's blood on the streets. Today we're closer to between 5 and 7 than we're anywhere close to 12. So today the market is in definitely a recession phase of the cycle. And you're seeing a lot of syndicators. No, I think we're right before the bottom. I think we're before the bottom. Yeah,
said 5.
And the reason,
said 5 to
7.
Between
5 and 7. So the reason I say that is because you have $850 billion in commercial loans coming due this year, maturing this year, and a third of that is multifamily. So you still have more pain coming online, and that extend and pretend with a lot of lenders, their patience is running out. So I think there's going to be more. But the prices have corrected close to 30% in many markets, in DFW, in Tampa and Jacksonville, even more than 30%. So is it going to drop another 30%? I would say impossible, because that didn't even happen in 2008. But is it going to drop another 5-10%? Possibly. But going back to the point I was going to make, free market prevails, and U.S. has a free market. Today, a lot of LPs are losing their capital. A lot of syndicator groups are going under. You can see it in the news, a lot of big groups. And there's been a lot of loss that has taken place on the institutional and on the more retail level in this space. And the market has prevailed. Government hasn't stepped in to fix any of that. Today, we're having the same problem in Vancouver with developers overbuilding condos, not apartments. And the Canadian government has stepped in and is bailing out those developers. So the Canadian government is not even allowing the free market to prevail, and for those developers to go bankrupt, and for those units to come online, and a younger family could buy those units and move in, or they could turn into rental. They're actually buying them, and they're saying that they're going to be putting them into the rental pool, which is like classic government intervention. So if the syndicators are so bad, they're going to eventually get complacent, and they're going to get eventually over aggressive, and they're going to shoot themselves in the foot, and they're going to get in trouble like they are in the U.S. In Canada, when they do make that mistake, government steps in and bails them out.
I'm sure you guys did this on your show, and when you were there, but I'm going to ask, again, August, we have an audience that cares, or at least works in the field of clean energy applied to real estate or sustainability, how you want to call it. So Let's say you're looking at a deal. You're going to hold it for 5 years. You're in the midst of underwriting it now. Walk us through the mindset of someone like yourself and your company and how you look at energy costs and the operating expense and the metering situation of a building. I mean, I'm sure Owen talked about some of this, but do you care? Do you even, if someone came to you and said, hey, I got a way I can help you increase your NOI with some kind of energy strategy, do you say, look, sounds interesting, but I'm going to hold this thing for 5 years. I don't want to mess with that. Or are you always trying to look for ways to juice the NOI?
Yeah, absolutely. I mean, everything spawns on, for a deal's feasibility, it all spawns on from the LP economics we're trying to achieve. Our team gets together and says, hey, today in this environment, we want to achieve high teens AAR for our investors, kind of mid-teens IRR. And that's to our LPs, right? So LPs are making 18 to 20% average annualized returns, 15, 16% IRR over the 5-year period on the deal. So when we start underwriting the deal, we input all the information when it comes to our purchase price, our rent growth assumptions, our exit cap, our expenses, insurance, taxes, and so on. So anything that could help increase those economics, because we have a service provider can provide a better service or a more competitive product, that's going to increase those economics. So absolutely, we'll look at a deal. Now, if you look at, if you say, hey, listen, over a 15-year period, you'll have these savings. And when I put the upfront cost into my model, and I see that over a 15-year period, yes, becomes profitable, but over a 5-year period, it doesn't. That's an initial objection that's going to be from our side.
Oh, and did you try the pitch on them at all when you were on the show?
Well, yeah, I mean, we talked about. I don't generally go into these podcasts pitching. It's more of like an awareness thing. I mean, August, I don't know if you're if you're feeling similar pain, but we're having multifamily owners, I don't want to say daily, but probably weekly, reach out to us and say, our electric rates are up 30%, 40%, 70% year over year for common area costs. And it's just eroding NOI in a way that they never forecasted. And so it seems like the inflationary burden of electricity rates are forcing owners and operators to evaluate energy projects on common area costs in a manner where they haven't really cared ever before, in my experience. Like, some people did it because it was nice, but it seems like everyone is now becoming sort of more astute around.
He says he's focused on Texas and Florida. Would you say that's still happening there, Owen?
Yeah, we had someone in Texas reach out. Their electricity rates went up 100% year over year. 100. I mean, that's like insane. Florida's not as bad, but the deregulated, it's interesting. I mean, I'm a free market guy too, but what's interesting about Texas is the deregulated markets are actually way more expensive than the regulated markets. So for someone who thinks and feels that free market economics should work, it doesn't in the Texas energy markets, which is odd. But like, is it causing pain in underwriting? Or are you forecasting energy prices any differently today than you were 4 years ago?
To be frank, I think when it comes to certain costs on our model, it is a matter of a market. Nobody can come in and say, hey, I can get better prices when it comes to electricity or when it comes to utilities. That's the cost that exists. So we're just going to underwrite with current costs that are on the property. If there are creative ways to increase NOI, if it's a chargeback on a per unit basis to tenants, or if it's bringing in the internet service and getting a spread from the provider, we're gonna kind of explore all those ideas. So if there is a service provider like you guys who offers sustainability kind of functionality for solar energy, but it either doesn't change my NOI or improves it, I'm on board all day long, right? So because if there is a component of having having some kind of like in Canada, a lot of times when you're a developer and you build more sustainable and you build more efficient, you get certain points and you can get higher density on the piece of land that you've bought. So there's the government, there's a good thing there, right? But then it gets taken advantage of as well. So with you guys, I mean, if somebody is using solar and they can get a break on their taxes, or if they can at least be in the good books of the city, or have some kind of a sticker they could stick on their leasing office, those are more incentives that could help. But overall for us, I mean, the way I'm looking at it today, and I wouldn't be honest if I didn't say that. I'm just looking at economics for us and our investors. Does a deal make sense? Sustainability is not even there yet, because I'm trying to grow and sustain the company itself. So that's my focus, not the environment at this stage.
Well, that's a good segue to our last question, August. Let's wrap up on this. This last question, we usually ask every guest the same one, and I'll just say it now. We say, in our world of the environmental movement and people that care about sustainability, there's tends to be too much focus on negativity, and maybe that's kind of overblown or some hysteria, but that's reality. A lot of people think that way. So we like to say to them, hey, let's not focus on negativity. Let's ask you a question. What gives you hope for the future? So, I mean, I'll ask you the same question, but I would imagine maybe you might come at it from a different perspective. You're an entrepreneur. You're asking people to give you money so that you can grow it, so that you can give a healthy return. You must believe in a future that is better. And I think maybe this comes back to your background too, as how you got to this continent and wanted to be an entrepreneur. So, yeah, let's ask the question. August, what gives you hope for the future?
I think it's the new generation. I think the new generation has changed a lot. Some bad, but some also very good. I think as we evolve and as we modernize and as we move through the process of more of a civilized beings, I think we're becoming more environmental conscious. I think some people do kind of take advantage of it, government in some cases and what have you, and so on. But I think people are becoming more conscious about the way they invest and the way they treat others. I think even like talking to my nieces and talking to kids in public places and stuff, kids are just nicer these days. When I used to go to school, kids were brutal to each other, to everybody else. I mean, it was tough for me growing up. But today, everybody is like a lighter version of the way kids used to be before. I mean, maybe they're just so lost in social media they don't got time to be bullies and mean to each other. But I think that's going to be more and more giving back and caring about your environment and preserving it for next generation. I think it's made to be more fashionable and more cool, and I think that will continue to happen. I think that's what I'm hopeful for, that my kids will see it as the norm to try to be more environmentally friendly. I mean, even look at things like recycling, or if you look at things like, people want to be more outdoors and stuff, and kind of fear of, missing from going outdoors. And so I think that movement has begun already in the new generation. So I'm hopeful that they'll continue and make our world a better place. Very
cool. Well, you're trying to raise money. Like I said, maybe someone listening, watching out there on this show will say, hey, I like this guy, August. I want to invest in some build to rent in San Antonio. Tell us where they go. What's the plug?
Yeah, I'm very active on LinkedIn, August Biniaz on LinkedIn, so you can reach me there, or you can go to our website, cpicapital.com. A lot of great information there. There's an option to connect with us. There's an option to download our underwriting model. We have our webinar master classes on there as well that you can watch, only accessible through our website, access to our podcast. So a lot of great information there, but you can connect with a team member and book a call, even with myself personally, if you wish.
I'm on the investor page now on the website. This image where it shows your logo on the side of one of these big racing sailboats, is this real? You guys sponsored a race here?
No, it's not real.
I appreciate the honesty, but it looks cool. Yeah, I'm like, cool. I want to invest in these guys. Look at these guys.
As soon as we have our logo on a sailboat, we're going to be more sustainable. I guarantee that. Okay. Sustainability is going to be at the forefront then, for sure.
That's a good deal. Okay, we look forward to that. August, we thank you for thanks for coming. Good luck with everything you do. We'll point people to your website in the show notes, and good luck out there.
Thank you for having me.
Yeah, good seeing you again, August.
Great
Well,
seeing you.
thank you, Owen, and thank you to our audience. You can find Owen and I on LinkedIn also, but usually actively antagonizing. You like this, August. We're antagonizing the sustainability nerds. So even though we are them, we like to mess with them too, and they definitely are, as a group, too much focus on government regulation and bureaucracy. We're aligned there. So yay. To our sustainability nerd friends out there, do better. We don't need as much bureaucracy. And then you can find this podcast and more great content at letstalkmoreaction.com. And until next time, we encourage you to ask yourself, what are you doing to take action to make the world a better place?